morning, ladies and gentlemen. How do you do? I'm your host, Seth Julian, welcoming you to today's session. And we are going to be looking at three Chinese-related assets. We're going to be looking at Tesla, NIO, and the dollar yuan. And this is so for the reason that the Chinese economy is on its knees. Close to 20% of the entire productive capacity of the country is now under house arrest. It's growing. The Chinese Communist health system is not capable of dealing with large-scale sickness and epidemic sickness in China. So they have this zero-tolerance policy for an event that knows nothing about tolerance. And they have not learned to cope with it. They don't have any workable vaccine. Their version of the vaccine is distinctly ineffectual. They have not, the population they've inoculated are the young people, not the vulnerable older people. And so we're starting to see serious cutbacks. Now this is Tesla, which of course has its own dynamic fundamentals, unique dynamic fundamentals. Nonetheless, from this point here, which is not so long ago, about a year ago, Tesla has lost 56.12%. This is the guy that wants to colonize the Mars, okay? He's got big plans, and a lot of people are into those plans and support him. Yet their money is not doing so well. So, oh yes, and I might add that a great deal of Tesla production inputs are manufactured in China, and they're not coming off the assembly lines. They're not leaving the back door of the loading dock, and they're not arriving at the front loading dock at the Tesla plants. And the price of the stock shows that. The other thing I want to take a look at is NIO. NIO is China's hope for electric trucks, excuse me. And this is not a pretty picture either. Same deal. Extreme stress on the stock. It's gone from a price of 60 to a price of 10 in less than a year, or about in a year and a half, my mistake. So, again, another terrific shorting opportunity for a stock that's battered in Chinese Communist Party land. Finally, I want to take a look at the dollar yuan. Yuan, as you know, is the offshore renminbi, the tradable, semi-tradable, I should say, Chinese currency for foreigners, which is called the yuan. It's not exactly freely exchangeable. It's not exactly freely floating. Like most things Chinese, it's semi-manipulated. But nonetheless, it's an indicator of the overall health of the economy, and it ain't looking good. As this chart goes up, Chinese yuan weakens against the U.S. greenback. So we see on this chart that there's been a tremendous weakening starting in about, we'll call it April, to now. It's weakened by 12.5%. That's that's a lot for the world's second largest economy's currency. And we've seen an adjustment, and it looks like it's coming back. Now, it's hard to say. It's early days. We pulled a Fibonacci retracement on this yesterday, and we saw that it's got a while ago to reach the 26% plateau. Nonetheless, dollar is strengthening, no doubt. There's a two-day chart, by the way. Yuan is weakening. The Chinese economy is on its knees, and Tesla and NIO and the dollar yuan show that. So, ladies and gentlemen, that's going to do it for today. I'm your host, Seth Julian, wishing you all the ability to trade with confidence. Bye-bye for now.